Namaste and good morning. Welcome to the SolarAane.com Daily Brief, your daily dose of business news that matters. I'm your host Neha, and today is Wednesday, April 15th, 2026. After 3 days of gloom, Dalal Street finally got a green day, but the macro data released today is telling a very different story. Let's dive in. First up, here are today's top headlines. The Sensex closed up 1,263 points, or 1.64%, at 78,111, and the Nifty added 388 points to end at 24,231. A strong rally, led by Interglobe Aviation, Eternal and Max Healthcare, as reports of fresh US-Iran peace talks and a dip in crude prices pulled investors back into risk assets. Wholesale inflation for March shot up to 3.88%, from 2.13% in February, with fuel and power contributing 150 of the 175 basis point rise, a direct readout of the West Asia oil shock. India's March goods exports fell 7.44% year-on-year to $38.9 billion, pulled down by a staggering 58% collapse in shipments to West Asia. The trade deficit widened to $20.67 billion. GST collections for March crossed the 2 lakh crore rupee mark for the first time, rising 8.8% to 2,064 crore rupees, a strong close to fiscal 2026. And Wipro's board meets tomorrow to consider a buyback that brokerages are pegging at 16,000 to 18,500 crore rupees, alongside its Q4 results. Let's take a deeper look at the numbers that dropped today because they all point in the same direction. WPI inflation at 3.88%, exports down 7.44%, the rupee at 93 to the dollar, petrol in Mumbai at 103.50 rupees a litre, and Brent hovering near $90 after briefly topping 103 earlier this month when Washington announced its naval blockade of Iran. Prabhudas Lilladher now estimates that if crude stays elevated, India's annual oil import bill could balloon by more than $70 billion a year. A rule of thumb they cite: every $10 rise in crude widens India's current account deficit by 0.3% of GDP and adds 20 to 30 basis points to consumer inflation. Crude, the report warns, is unlikely to return to its pre-war level of $65 a barrel anytime soon. So what does it mean for your business? If you're an MSME running any kind of logistics, manufacturing or food business, treat today's WPI print as a warning flare. Fuel and power inflation is now running at 4.13% month-on-month. That flows straight into your diesel, your transport contracts, your packaging, your power bills. Exporters to the Gulf, multidisciplinary from Kerala's seafood players to Tirupur's garment units, are already seeing the 58% collapse in West Asia shipments in their March order books. If you have customers in Dubai, Muscat or Riyadh, lock in forward contracts this month and assume payment cycles will stretch. If you have input costs linked to crude derivatives, plastics, paints, transport, start renegotiating supplier terms now before the next cost push wave hits in May. Moving on to a story that Bloomberg broke this morning, and that has big implications for India's manufacturing ambitions. Reliance Industries has been trying to import around $1.1 billion worth of equipment from China to kit out its planned lithium-ion battery plant, the most serious Indian attempt so far at advanced cell manufacturing for EVs and grid storage. But Beijing has tightened export controls on battery-making machinery and technology, and those shipments are now stuck. This matters because India's EV market just closed a record fiscal. FY26 retail EV sales hit 2.45 million units, up nearly 25%, with electric two-wheelers alone topping 1.4 million. All of that growth is currently riding on imported cells. The whole premise of the production-linked incentive scheme and of our battery storage push was that domestic gigafactories would break that dependency. When the country's largest conglomerate cannot even get the tooling out of Chinese ports, that timeline slips. For MSMEs in the EV and components ecosystem, charger makers, battery pack assemblers, motor and controller suppliers, this is a planning signal. Assume domestic cell supply stays tight through 2026 and pricing stays imported cell-linked. If you are pitching to OEMs, bake in the FX and tariff risk explicitly. And if you are in auto components, start talking to Korean and Japanese cell makers now. That is the diversification trade the whole industry is going to run. So what does all this mean if you're running a business in India today? First, the market's cheer today is fragile. One piece talks headline moves the Nifty 2%, but the WPI and trade data show the damage is already in the real economy. Plan your working capital for a tight summer. Second, fintech is becoming a feature, not a project. Razorpay's tie-up with OpenAI now lets developers embed a full payment gateway via a codex prompt in minutes. If you run a D2C or services business, your next web build should have UPI and cards live on day one. There is no excuse for 6-week integrations anymore. Third, compliance calendar reminder. From April 1st, RBI's two-factor authentication mandate is live on every UPI, card, and wallet transaction. And the RBI's April 10th discussion paper proposing a 1-hour delay on UPI transfers above 10,000 rupees is open for feedback until May 8th. If high-value UPI is how you take payments, read that paper and respond. Finally, MSME cash flow. A new parliamentary report flags that average payment cycles have stretched from 30 days to over 120 days. And that is why gold loans to small businesses have surged 128% to nearly 4 lakh crore rupees. If you're relying on gold loans to bridge receivables, go check the Tradius platform. It has now crossed 2 lakh crore rupees in invoice financing, and the rates will beat your jeweler almost every time. That's your solaaane.com. Daily brief for today. If you're thinking about buying or selling a business, head over to solaaane.com. That's 1-6ane.com, where we make business deals sola aane paka. See you tomorrow.